Hey everyone, Couch Investor back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. So in this video, we have a lot to cover, lots of numbers out of China, the state of the car sales in China, in Europe, in the United States, some price hikes as well, and then the current state of the EV business, the EV market as well, because there is a lot of noise right now in the market. Lots of articles coming out that demand for EV is just not there, and that's why all these executives of all these companies are now reducing spending with regards to their EV business. The investment plans are going away, etc., etc. So we're going to have a talk about that because remember, when sales were dropping for Tesla, when Tesla was dropping its prices of its vehicles, it was because the competition was coming. Suddenly, the competition is just dropping the ball. Plus, the reason is it's because nobody wants EVs. I find it very, very hard to believe. Anyways, let's first start with China. So, first up, China retail car sales from January to September. You can see that Tesla Model Y is the best-selling model in China so far this year out of 675 different models. We can also see that year to date, the next 5 brands ahead of Tesla are growing much slower or even shrinking compared to last year, which are basically Nissan, Audi, Mercedes, and BMW have increased around 3 to 5%, but Wuling is down also 17%. And as for the Model 3 Highland, the deliveries have officially started, so that's great news. And of course, this should not surprise you that almost all Tesla vehicles sold in China last week were Model Ys, but now as soon as the deliveries for the new Model 3 are expected to begin, you will probably see the Model 3 back in the top 10 sooner rather than later. With regards to the Model S and X sales in China, in September, Tesla imported 642 of those models in China, which is basically the same as August. We also had a price hike for the Model Y in China, so the Model Y performance went up by around 1,900 USD. But of course, since this is a price hike and not a price reduction, nobody really wants to talk about that. As for the China weekly insured numbers, they came in at 8,100 for the week October 16 to 22, which is a bit better than last week, but still not up there with Q3. Remember, this is because most of these cars are Model Ys, but now that Model 3 Highland is expected to be delivered, probably we're going to see an uptick in the coming weeks. So it's safe to say that so far, so good in China, despite all the negative sentiments right now with regards to the car industry and more specifically even EVs. Now, let's have a look at what happens in the United States and in Europe. But before, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We're really close to reaching 30,000 subscribers. So let's try and do that before the end of the month. Thank you very much for all the support. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thanks again. Now, US car sales year to date, so from January to September, Tesla is the fastest growing car group in the United States. It's up 41%. Then you have Nissan Mitsubishi up 26%, American Honda up 33%, Stellantis is actually down 1.3%, Hyundai Kia up 15%, Ford is up 9.2%, Toyota 3.6%, GM is up 19.4%. Of course, Tesla still has a long way to go, but hey, so far, so good, and this again is overall car sales. We also had a price hike, not that meaningful in the United States, but still a price hike for the Model Y long range. The price increased around $500. Of course, now all the analysts have to update their EPS estimates because Tesla now did increase the price by $500, so all the price targets now have to change, right? It has to work both ways. When the price drops, EPS goes down estimates. When the price goes up, then the estimates should go up. So why aren't we hearing a lot about that? Again, double standards. Now, with regards to the state of EVs, EV demand, legacy auto, etc., etc., I'll first start with this tweet here from Brian Sullivan. He works for CNBC. So he tweeted out in July, car companies are waking up to the fact that most buyers don't want an EV, they want a Tesla. He then retweeted this, saying, have to go on what the reporting tells me, even if some don't dig it. Now, why do I want to touch on this? Well, because articles like this are popping up everywhere these days. Ford, GM, Mercedes come clean on EV demand weakness. So what did Ford CEO Jim Farley say? He said, "It's been a challenging situation for sure. Matter of fact, our business is never short of challenges, especially right now with the evolution of the EV market and new global competitors from China, as well as the technology disruptions." He continued by saying, "A great product is not enough in the EV business anymore. We have to be totally competitive on cost." Now, where did we hear that before? That a great product is not good enough? Cost matters. Tesla CEO earnings call on X for a long time. You see, it's not just Elon that is saying this, it's other car executives as well. Now, he continued by saying something here. Tesla actually gave us a huge gift with the laser focus on cost and scaling the Model Y. They set the standard, and we are now making real progress on our second and third cycle EVs that are in the midst of being developed today as we get closer to the introduction. Say what you want about Ford, but they're very, very lucky to have Jim as their CEO because this guy actually gets it. Now, moving on to General Motors, the leader, of course, Mary Barra, she said here, "We are reducing our fixed cost by $2 billion net of depreciation and amortization as we exit 2024. We are also moderating the acceleration of EV production in North America to protect our pricing, adjust to slower near-term growth in demand, and implement engineering efficiency and other improvements that will make our vehicles less expensive to produce and more profitable." GM also made a decision earlier that week to postpone a $4 billion electric truck plant in Michigan. And of course, there's still the strikes going on, which are costing them a lot of money. Last one here, as for Mercedes-Benz, he said, "I can hardly imagine the current status quo is fully sustainable for everybody. I would say this is a pretty brutal space." And of course, we then have articles like this. "Forget the UAW strike. The real crisis may be a lack of demand for EVs." Yes, it's true, lack of demand of EVs, and that's why the best-selling car, not EV, best-selling car to date is an EV that is costing way more than a cheaper ICE vehicle. Makes total sense, right? Now, moving on here to Cruise, which obviously GM owns. After it being suspended, they actually posted this on X. So the most important thing for us right now is to take steps to rebuild public trust. Remember, public trust. Part of this involves taking a hard look inwards and at how we do work at Cruise, even if it means doing things that are uncomfortable or difficult. In that spirit, we have decided to proactively pause driverless operations across all of our fleets while we take time to examine our processes, systems, and tools and reflect on how we can better operate in a way that will earn public trust. This isn't related to any new on-road incidents, and supervised AV operations will continue. We think it's the right thing to do during a period when we need to be extra vigilant when it comes to risk, relentlessly focused on safety, and taking steps to rebuild public trust. 3 tweets, 3 times public trust. So, is it a statement that they're making right now because they know that what they told the DMV was not 100% correct, or are they just being extremely careful right now? Remains to be seen. It has definitely not been an easy week or so for GM. Now, let me be extremely clear. I do not want all that pressure to go on Cruise, on Waymo, on all the other companies that are trying to make driverless system work, because there are some groups that are very, very anti-driverless cars, etc., etc. I don't think that's the right way to go. Yes, safety is extremely important, but just being anti for the sake of being anti, we're not going to make much progress like that. Just so we're clear. Moving on, Europe. Tesla Europe tweeted out, or posted on X, Model Y just broke the record for most sold car in a single year in Denmark, held since 2013. Again, of course, there is no demand for EVs, it seems. As for European car sales by brand, January to September, Tesla is the fastest growing compared to last year and could move up a place or two in Q4. Of course, Tesla is still a small player in the overall European game here, but I mean, the progress is pretty impressive. Then if you want to have a look at the European car sales with BEV shares January to September, you have in green BEV without Tesla and then the red with Tesla. As you can see, the road is going to be very long, but hey, all of that market is up for grabs. Then last thing here before we look at the graph was this announcement by BP. They will boost their EV charging network with a $100 million order of Tesla ultra-fast charger. The agreement forms part of BP plans to invest up to $1 billion in EV charging across the United States by 2030, so this is definitely just a start. Now, of course, remains to be seen which other big company, energy company, is going to follow suit. Are we going to get the same trend as we've seen with the adapters? Could be. This is another line of business that Tesla suddenly is in. Then last thing here is the graph, of course. Horrible 2 weeks here for the market and for Tesla as well after the earnings report. This line right here is of course that magical round number, the $200 mark, which was a bit respected because we went back over it. We finished Friday a bit greenish, so we're now at $207. 200-day moving average is at around, again, $230 or so. This line right here, the $200 mark support, is going to be crucial. RSI is a bit under the neutral part here. And don't forget, next week we're going to have the FOMC meeting. Very, very important with regards to the sentiment of the market. Rate hikes, pause, cuts. Probably the thing that will move the market is what Jerome Powell will actually say. So that will be it for this video. Of course, it's been a very hard week or two for most tech companies, most companies as a whole on the stock market. The stock market has been hit hard, whether it's because of weakish earnings, whether it's because still high inflation, macro, geopolitical issues, etc., etc. Yes, tough times, but if you're in it for the long-term future, I mean, those are the times where good opportunities arise. So that will be it for this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.